Right. So today's class is going to be quite an open one in the sense that it may not necessarily what they call it may not necessarily be the questions will not wait until after the class. So I want it to be that if there's anything you'd want me to touch on, just have your hands raised and then one by one we'll be tackling the questions. Do you understand? So that I know where to focus the Saturday classes on in terms of areas where there are still deficiencies, things that people don't understand, and all of that. Then I also mentioned that in one of the Saturday classes, I'm going to take you guys on the time price opportunity indicator. That's the one that looks like the volume profile. I think after this coming Saturday, it should be the next one. So I'm suspecting the last Saturday of this month, we should kick off with the other flow too. Just the temporary opportunity, by the way, right? So I'll start from one person. And by the way, let me share my screen to my trading view. Now back to what happened. I think I took two major trades last week. I was on if you look at EURCAD, this one, there was a type A in this particular setup, more like other flow mitigations as well, right? Chain of other flow mitigations. I told you, when you have price, or then demand zones, creating demand zones, creating demand zones, something just like this. The first demand level here was what a type B setup. Price did what? Price took out a lower high, went ahead to do what? Break structure. Before you broke structure, it put in what? A form of inducement. Now, after the form of inducement was created, it gave you what your typical type B setup. Now, price can mitigated. Let me see if it mitigated up to 50% of this, right? So this would have been the entry here. For long candles like this, just use 50% of the entire candlestick to get your entry. All right. So this would have been the entry at this point. And then price came, mitigated that entry and did what? Gave another type B setup. All right. And so this becomes what? For the type B setup, 50% again, you have your entry at this point. All right. So you have too many confusing candles and you have to map out your order block. Just use the top and the high of that range and then mark out 50% as your entry. And then what happened? Price came mitigated, got to the upside, came back to entry and was continued down. But then that little reaction that happened there caused what a sweep to occur at this point, whereby price was took out this low. You can see a clear sweep. And then what happens after that low was taken out? It continued to the upside, right? And then we had this internal growth of structure. And then we had a pullback that came back into 50%. If you look at this, the engagement level did what? Pulled back into 50%. And then we had guys continue what to the upside, giving us what an external break of structure. Our typical type A setup. Your sweep, your break, your what engagement. And what happens? Just set your entry on your price buy. This was also following what the trend line. You notice this was what respecting trend line. So price was what going to buy a typical type A setup in EURCAD. I think it activated on Thursday evening and hit take profit on Friday afternoon. As easy as that. And another setup I took was the EURJPY. I told you when it comes to correlation, minus what you're very used to when it comes to correlation. I know that you're already used to the whole what do they call this USD pairs. Of course, you know that when DXY is buying USD pairs that have USD as their code currencies, they are selling. When DXY is selling, pairs that have USD as their base currencies, they are buying. Like if you look at, I know some people had like buys on gold. There were some people that were looking to buy gold at this level. I don't know if it was this level, but I saw a lot of markups at this level from some of the people at last. I think it was Timothy setup. Now people were looking to take a buy from gold on this level. But if you look at DXY as at this day, I told you that DXY is your measure for USD pairs. If you look at what happened on DXY that particular day, DXY moved from this level, that's 99.418, to as high as what? 100. This is almost 1% buy. And I told you that when DXY is buying, what's happening on pairs that have USD as their foot currency, like XAU USD, GBP USD, EURD USD, all other USD, you have AUD USD. All these pairs that have USD as their cryptocurrencies, they are what's going to be selling when DXY is buying. When DXY is selling, they are what buying. They are they are what negatively correlated. So meaning what DXY is doing, they are doing the opposite. So since DXY is buying on this Friday, you're anticipating that these pairs that have USD as their quote currencies, they're going to what sell. And that is why your buys will not necessarily hold. If you look at what happened from the point of that buy, this was what sorry, from the level of that buy being triggered, this was almost a look at it. We experienced what a minus 2.82% decrease in price on gold. Why? Because what DXY is what buying. So this is going to sell. And you can see that even when DXY reversed to start with, when DXY reversed to start selling, which is what you noticed happened here. What did we notice on gold? Gold reversed to what? Reversed to start buying, which is what is happening here. So these correlations, they are what for pairs that have USD as their what as their base currency, they are what positively negative. Okay, base currency as USD positively correlated. What DXY is doing is what they are doing. Like if you notice when DXY was pumping, pairs that have USD like USD card will be what will be pumping as well. All right, you can see Friday's price action in USD card. This was okay. You can notice that from this level, this is what the pump move on USD card. Why? Because it had USD as its what as its base currency. So whatever this thing is doing, it's also doing it. Whatever DXY is doing, you can see that we experienced what a minus 0.62%, sorry, a 0.62% increase on USD card because well, it has its base currency as USD. So whatever DXY is doing, this is going to be doing. But the ones that have USD as their second currency, whatever DXY is doing, they are doing with the opposite. So if DXY is pumping, most likely 90% correlations are up to 90% correct or accurate in test of times. So it's usually is sometimes like you would see something like GBP and EU doing opposite, moving opposite directions. It happens, but very few times. That's why I said it was correct up to 90%. All right. So most of the times you realize that most of your analysis have to do with in correlation with what DXY is doing, except it's a counter trade or a scalp. But if you're going to be trading normally, always check out for the direction that DXY is going. It's going to guide your analysis on what to be looking out for on your normal pairs, that's your currency pairs. All right. And then you would also realize I told you that pairs like the CHF, the JPYs as well. All right, I told you that these pairs sometimes they also move alike. By the way, this was a trade on GBP more like a type B setup as well. You look at what happened. Price mitigated this demand zone, all right, and after the mitigation of the demand, there was a sweep of liquidity. All right, we had a sweep of liquidity, and then before price broke out of the 50%, it was created this form of inducement before it took out this lower high. All right, created the form of inducement, And then what happened? He pulled back towards mitigate the entry and what continue to the upside. More like our type B setup. This was last week price action as well on GBP and ZD. I didn't execute this one. I didn't also execute one other one. I think it was AUD USD. I had the analysis, but I didn't execute. Let me see. Oh yeah, AUD USD as well. This was more like a reclaimed block on this level, but then it was an other block as well. To me, he had what? He had a sweep, yeah. So you had a sweep, and then your inducement before price broke out, right? And then price came back up, mitigated, and it was continuing to the upside. I didn't execute this. I don't know why. I was already on like three setups already. I had three setups running, so I didn't want to add more. But then for the JPY page, like I said, what EUR JPY is doing, you're most likely anticipating that AUD JPY, CAD JPY may be showing the same patterns. That's why I told you that if you're somebody that like trades multiple pairs, that can be an insight to correlation that you can add to your trading strategy. Most of the times that you see trading opportunities, like there was a buy on EUR JPY that I was on. I had to close on Friday. I didn't want to hold trades over the weekend. Now I was on this buy, monitor the level price of buying from. If you go to, let me look for another pair with JPY as its both currency. Let's go to AUD JPY. You realize that there was what same buy opportunity. In this case, now we have something like what a type B entry model. You have your sweep and your inducements before price was broke out by taking out the lower high. And this was what a mitigation to a demand zone. This is a proper setup that you can what you can execute. All right. This is a proper setup that you can what that you can execute. As simple as this. The same thing. So most of the time that you see entries on one JPY pair, most likely another JPY pair is what doing the same thing. Very most likely. If you go to what other pair has JPY, let's look at CAD JPY. This particular JPY is one of the most used JPY pairs ever. Right, this one it bought, but it would have been a kind of buy that I would have participated in. So it's a no for me. This is not looking like a good setup that I would have taken. Let's look at another JPY, NZD JPY. All right. Now this is NZDJPY with the same words, with the same type B setup. I told you most of the times that they're buying from what? The same level. If you look at from all of them now, probably would have when you consider your options, when you check all of them, when you look at the ones that works that most likely higher probability. For something like this now, this is of course type B, yes, but it's not as good as what do they call it? As AUDJPY was, because here you can see that there was no mitigation, no prior mitigation to any level, so it's not a confirmation to any level. Although it's play out because you are for the JPY pair they want to buy, but then some of them are what of higher probability. So instead of when you're not analyzing all of them, then you do what pick out like two or three that has met your criteria or one, depending on how you want to trade or how many setups you want to take. This is CHF JPY2. This will pay out again, maybe next week. What else again? I think these are the ones I'm currently on. Let me just see what am I. Okay, I think I'm waiting for a level here on AUDCHF. Price reaction towards entry is going to determine if this will play out a lot. But then I'm currently waiting for this level here. Maybe next week price action. Maybe before the week starts or during the week, I'll drop some of my trade ideas I'm looking out to trade during the week. But then of course it's still the same thing over and over again. Your type A in relation with what price is saying and what the 4 hours time frame. It's important. You will notice that most of the times I don't even go above 1 hour. All I do is what sorry below 1 hour. All I do is what interpret my price action on the 1 hour time frame, and then what do I do next? I go to the 4 hours time frame to validate it, and then after that I just execute. So I don't really go below 10 on 1 hour to look out for these patterns. Everything I do is on the 1 hour time frame. Then I rise higher to make sure that I get in line with market structure. Analyze your market structure on the 4 hours. You go to the 1 hour, mark out your patterns. You can see these things are there was one very good trade. This girl, Jenny. If you look at that bank USD, all right. So they were going to stop for a while. But then if you look at the bank USDT that Jenny took today, was it bank? I can't remember. You realize that it's still the same thing again on cryptocurrency. I won't be able to, if I share my screen now, I don't think you guys will see the Telegram group because of the settings. But if you go to the trader again group, so there or the winning set was one of them. The trader idea was dropped before it actually paid out by the way. And she updated it as well. You realize that it was still what it's still the same thing in any market. The extent that you guys took on chat and discussion group earlier, I think last week or something, right? I also participated in that trade. It was still the same thing. So whether volatility indices, whether currencies, whether that's cryptocurrencies or forex currencies, it is what the same thing over and over again. As a matter of fact, I'm not assuring you that you won't take losses. All right. Throughout this week, I didn't take any loss, although I executed just 3 trades. But I think last week I did take. All right. So I'm not assuring you that you would be loss free, but I'm telling you that it is very possible that you record a win rate of up to 70 to 80%. Very, very possible. All right. But you need to dwell, you need to be doing the right thing. Let it be that when you take losses, it is because what you have exhausted all of your options, more like you did everything you should. There are setups I see on the trade I get this and I'm like, what do I have to start over again? So I think it was even somebody that asked a guy like, is there a setup here? Do you understand? Look at what your mates are doing. Some people are already on the right track. Then try to attach yourself to them. You understand? Ask questions at any point that you feel like if you have a setup marked out and you send it there and somebody corrects you, it means that there is something very obvious that should be corrected. All you need to do is to take correction. I feel like some of you are even scared to get out of your shares and your shares and um join what's happening in the community. You should not be ashamed of dropping your seconds before the payout. You shouldn't be. As a matter of fact, that was the way that I drilled or trained the people at like a staff and TLS as well. I don't think anybody takes any setup without dropping it first. It is how they are. They all look at the same thing. And that's how it's supposed to be. All right. So you should be confident enough to be open to criticism and corrections. There's definitely something that you would not be saying that someone else is saying. And there's something that someone else may not be saying that you be what saying. Like I said, these are what the advantages of a community like this. You get to learn with other people. All right, so this is already 9:37. I'm just going to allow questions. I want it to be an open session, so as long as it takes, let me take on what is bothering people and let's learn together. All right, so from the first hand up, we go to you can unmute yourself. Good evening. I don't know if you're trying to talk, but I can't hear you.
Yeah.
All right, good evening. Go ahead, please. Please be very fast. There's no time.
Okay, so in the basic subtopic group, that's how to create a trading plan. There is something you drop there on that trading goals. The short term, yeah, the short term. I don't really understand what you were trying to explain there, and it has always been bothering. So I wanted to ask if you could explain it more.
Okay, so you know what's going to happen? I think I'll probably have another session explaining how to create that trading plan. I thought the templates would be explanatory enough, but then let's just like quickly answer your question. You know, for me, there's an app that I have, right, that I usually update all my trades on. Now on that app, when you log in, you get to set your weekly goals, your monthly goals, and your yearly goals. You understand? So as a trader, it's good that you have something to target, but then something realistic. Your short-term goals can be that okay, at the end of this month, I should pass this top 10. I should make 10% on this account. I should do this. It does not necessarily mean every day will be a winning day. But in spite of all of the losses and all of the wins, at the end of this month, I want to witness a 10% growth in my account size, a 50% growth in my account size. I don't know if you understand what I mean. So it may not necessarily be okay at the end of the year, I want to make $500,000, I want to do this. These ones are set weekly or monthly. These are your short term goals. Do you understand? Your long term can be okay. As a trader in the next 1 year, this is where I want to be. In the next 2 years, this is where I want to be. This is what I want to have. But then short term are the ones that you can easily track. You understand? Your weekly goals, your what, your monthly goals. So I don't know if you understand what I'm talking about.
Yeah, I understand. And secondly, sorry, my second question. You remember the in the suggestion group, I suggested that you explain more on that risk management, and you said you're going to do that on today's class. So I just wanted to
For
remind,
for cryptocurrency,
like general, not just cryptocurrency, even the currency pairs.
okay, so I talked about, this is relative. I'm probably just going to talk about my own approach, and then you'll be able to tweak it to what suits you, right? I
Yeah,
usually trade bigger account sizes most of the time, except it's a Naira account because I do trade an Naira account as well, right? It's usually like around 1 million or below, just slightly below 100K and all of that. So for my big account sizes, it just depends on the account size, by the way. But then I talked about the most important approach that you can have towards risk management is making sure that you don't use percentage as your guide for taking risk. Instead, you're using what? A constant. If I have a $100,000 account now. Okay, let me use Pop Firm. I think that should be more relatable. So let's say I have $100,000 account. That's a Pop Firm account. You already understand that your access to that account size is what? Just $10,000 because what you are going to be having access to is just what the drawdown. So your account is not, in reality, is not a 100K account. Instead, it is what? A 10K account. All right. So if I have a $10,000 account like this, now, my approach will not be that at every trade I'm risking 1% of my account size. You understand? Because with each trade, whether wins or losses, 1% increases. If you make an extra $2,000 on this account, and then it becomes what, $12,000 as the account size and no longer $10,000, the 1% is no longer 1,000. The 1%, sorry, I meant 10%, not this thing. All right, let me use 1%. 1% is like 100, so that's too small. So let's say 10%. If you're going to be risking 10% on this account, which is what? $1,000. All right. Now, if you make an extra $12,000 at the end of the week, and then you want to continue your 1%, you would realize that 1% is no longer $1,000. It is now what? $1,200. The same thing when you go into drawdown. Let's say the account reduces to like $8,000 now. You are in $2,000 drawdown. 1% is no longer $1,000. It is what? $800. Now, this is going to disrupt your risk to reward ratio. It's not constant. You realize that, oh, when you have winning trades now, let's say the account is at $15,000, and winning trades, you're what? You're losing 1.5, right? And then when you have good setups, you're making like let's say 3,000. Like your risk reward game is going to be shaky, and that is why
yeah,
I'm insisting on using a constant risk. If you have an account balance of $10,000, usually I before now I used to split my account into 20 places. I think I've talked about many times. For those of you that have known me long before now, you'd realize that when I was preaching profit in 2023, I used to talk about splitting my account into 20 places. For $10,000 like this now, I'm going to split it into 20 places, which is what $500 each. So which means that at every trade setup that I take, I'm going to do what? Risking $500. It will take me 20 trades only. I have 20 trade opportunities to either pass or fail this account size. For now, I use 10, but then you can use 20. Even when I was, starting out, I was using 20. So now I just do my thing with 10 places. My weeks on a 200K account is $2,000. All right. Whatever happens in 10 trades, it decides. But you can give yourself the grace and the leniency to do that with your 20. All right. Now your risk is what constant. At every loss that you take, you're losing $500. At 1:5 take profit, you're making $2,500. The next trade again, you're taking what? Another $500. It is not fluctuating. That way, your risk reward ratio is what? Consistent. Do you understand? You don't like you're making, you know what you're making at the end of the trade. So that approach is way better. All right. You have your fixed trades. Your mind is here that okay, 20 trades is going to decide if I pass this or I don't pass this. Most likely before 10 trades with a good risk to reward ratio. Moti at like a star has just a I think 45% win rate on forex currencies. He does better at synthetics. All right. He has a 45% win rate on forex currencies. Well, he's currently funded around 25K. This is his third payout this month. Good risk to reward ratio game. You know, good risk to reward ratio game. With 45% win rate, you can make a lot from both terms. Talk more of some of you that can get as high as 70, 60. There's nothing limiting you at all. 70, 80% win rate, you should not even be in this conversation. You just need proper risk management to milk a lot out of it. All right. But then with time, we'll be talking about more guides and approaches as it comes to my head. Okay. Do you have any other question to go to? David John, good evening. You can unmute yourself.
Thank you.
Good evening, sir.
Yeah, good evening.
My question is just basically on the charts, you understand? Like I usually get confused when it comes to the aspect of price actually changing character to mitigate a POI. I don't know that what I'm confused about is just the aspect of if I can use candlestick confirmation in those kind of aspects, or I need to wait for another change of character to be confirmed before I
So,
can.
so it depends. I don't know if you understand what. Yeah, that's the thing. If it's like you have, let's say, let's go to this NZD now. For something like this now, if you look at, let's forget about this price action. Now, this was the first mitigation. This was a demand zone that price was coming towards. Now, for this particular demand zone now, if you look at the approach towards the demand zone, I even had a sell position here earlier that time. I had the sell position to show you that price was turning bearish. We had our sweep, our inducement level before price did what? Before price broke out, took out a low, came back to do what? Give another break of structure. Meaning that price was what? Now bearish, waiting for what? Reversals. And you can see that it hit what? Take profit targets and continued selling. Now, this approach towards the point of interest was what a bearish approach. All right. Most people would have caught good sales in between this whole price action that was going on. All right. But then let me show you what happens now. Now, when price gets to point of interest, you don't buy immediately in a setup like this. All right. You don't buy immediately in a setup like this. It is not mitigating anything yet. So something like this can happen whereby as price is coming to this POI, instead of reacting from the POI, it fails it. Because this is what a bearish price action. This is the current cycle. All right. So for something just like this, you need to see what you need to see price take out. I told you you need to see what price take out the previous lower high. You need to see price take out the previous lower high. So in cases like this, you're going to be using what pattern confirmation. Now, when you already have pattern confirmation like this now, let's say something just like this now, price has taking out that lower high, giving you your sweep and all of this. This is the one that you now take without minding the replacement to POI. I don't know if that's clear enough. I don't know how to explain it that you're not still confused. Price approach to a POI like this is a shock. All right. But then the moment price changes character on a point of interest, that is the reversal that you need. All right. So in a case like this, now you're not skeptical about price taking out this, but that's taking out a lower high. You understand? So that
That's good.
pattern confirmation now, for this one that is the pattern confirmation now, don't need anything, don't need don't use candlestick confirmation. Right? Let's say it's on synthetic. For synthetics, I really recommend candlestick confirmation on a POI. It will save you from a lot of losses. But something just like this one, this is what your perfect entry now, because it is a mitigation of what a previous entry, showing you a trend continuation. It is different if this is just coming from nowhere and you're guessing the demand zone that would revise price. So this is where pattern confirmation comes in. Are you clear? The person that asked that question, are you muted or what?
It's clear to me.
All right. This one time for please very quickly. You can unmute yourself if you can hear me.
Okay, good evening. Please, can you hear me?
Can you hear a little bit more audible? I can hear you, but just
Can you hear me properly now?
yeah, it's better. Please be very fast.
Okay, so my question is concerning the chart you showed us on AUD JPY and CAD JPY. Like I don't know if you can go back to maybe AUD JPY. There was a continuation that you made, but like I didn't see a sweep there. So I want to know what made you know that that pattern was going to hold, and what made you choose your yes in this chart here. So like for your continuation here, what made you there was no sweep there. So what made you convinced that this was going to hold?
First of all, this was a mitigation to a previous demand zone. Do you
Okay.
understand? Yes. And then there was sort of a sweep when price took out this particular level for this point. Can you see what happened here? It was, let me go to the 30 minutes time frame or 15 minutes. It should be more evidence. All right, this is 30 minutes time frame. Can you see what happened in this at this point here? It was like a sweep of this entire level. Do you understand? Price took out these lows. Everything happening here was taken out. So there was actually a sweep. It just was not so clear on the 1 hour, but then it's a confirmation entry. Do you understand? So I would have, if you look at the candlesticks now, I don't know if you would see it properly, but you can see that this particular candlestick went below what the previous one with the week. That is the sweep. Do you understand? So if you look at what happened now, we had this initial demand zone. Sorry. All right. So we had this initial demand zone here now. The price was as mitigated. So there was a sweep here. The moment price took out this low to mitigate this first demand, that was the sweep. And then it created what an inducement level before it broke out. And then finally what broke out, took out what this particular high. This high here, took out the high and then put back to entry. So it's just like a pattern confirmation with this time A type B. You understand? Can you hear me? Muted. Okay. So Koda, I don't know. Can you unmute yourself? Boogie, can you unmute yourself? Mm.
Hello, good evening, sir. Can you hear me?
Yeah, good evening. I can hear you.
Okay, so you said you were going to talk about stacking in the next class. I don't know if that will be possible again. And I don't know, I would like for you to touch marking out OB again because some of the OB, some are very easy and visible to mark out, but some are complicated, like the one that you helped us out in
Which one
today.
of you? On
Sorry?
Victor, is he the one
Yeah,
on
on the
Victor?
yeah.
Was it really hard to mark out? Let me go back there. I don't know if I saved that layout, so let me check. Okay, so this is the order block that I mapped out, right? Now, here's the
Yeah.
thing. The first thing is that is this. If you're confused about what level, are you guys already on this trade?
Yeah, we're on the trade. Me and some others.
He was literally raising me up, guy. Like I even forgot.
Mute the
Sorry, I
call.
just took.
Okay. No, you can unmute yourself now if your background allows. Can you hear me?
Yeah, I can hear you now.
Right. So here's the thing. When you guys asked me if this had mitigated, I think it was around here, right? And I told you that it has not mitigated yet. This is why, if you look at this particular OB, when you have an order block like this, as hard as this for you to map out, all you have to do is to what? Is to take out your 50% Fibonacci 2, right? Just take it out and then map it out from the beginning of the week. You can see in this case now I'm using this bearish candlestick, all right, from the beginning of that bearish candlestick to the lowest candlestick, just like this. I told you any range that you're confused about, that you don't know where is your order block or where your order block is, over all of that, all you have to do is to what? Map out 50% of it and use it as your entry. All right. In this case now, that 50% is even merging with what an overlapping demand zone. You can see these two candlesticks crossing themselves, all right, which is what perfect. There's an order block resting at that level. So mapping out your 50% like this now, this is going to be what your entry, and that's the one I sent to you guys to use, which I am sure that is what you guys used. We realized that it was more like a slide. Um, Sorry, this is a cell two. We realize that it is with better what precision, something just like this. All right. So at the point that you asked me if this had mitigated, I think it was around here. There was no a mitigation yet. The entire range does not count. If you're going to be using anything, just if you're too confused on what to map out the candlestick body and ignore the width. Do you understand? For something like this, now this is a candlestick. This is where the body started from for the bearish candlestick. Or instead, just use what 50% of the entire confusion. Whatever is confusing you, whether it's currencies. There are times you would find big order blocks on currency pairs or all of that when you want to map out, like you see too many weeks. All you have to do is to just do 50%. All right. As you guys use this entry now, you can see that price just mitigated and was fair going to the upside. There was not too much gathering because that is the point at which price is what well priced. Do you understand? Are you following me? Okay, you're probably muted, but then you can unmute yourself now. Are you clear before I move to the next thing? Are you clear now?
In that one, but I think I can ask something else because when it comes to like psychology, I think I've not really talked about that part. I don't know if there's a lot of things you have to say concerning that part because some of us, as we are new, like people just tend to, based on like small reversals, you just see people closing trades or stuff like that. I think there's anything you can, say to that concerning psychology of holding trades.
Well, the thing is, psychology is not going to be one session. As a matter of fact, the entire idea or the entire thought process behind, I mean, at the end of this class now, I could easily say, okay, I've taught you the technical aspects, that's what you need and all of that. But then the entire thought process of hosting weekly classes for a year is to make sure that you're still on track at the end of the day psychologically, because teaching you the technical aspect is one, but then you making money from what you've been taught and what you understand is another thing. Do you understand? So definitely psychology is going to be well emphasized on, very well emphasized on. It is very important and it's not something that I'm going to skip or something I'm going to stop talking about. The major reason you see me for this classes trying to make sure is that I'm trying to make sure that people are executing well already. Most people you see on the class, forget that some of you are taking synthetic trades and all of that. There are people on the club that have not started executing. There are people that are still following up. There are people that are still trying to understand. People that probably did not start the club before now, just going through recordings, through exams and all of that. So everybody is not on the same level yet, which I'm trying to make sure that a good number of them, because definitely everybody cannot be saved, but a good number of them are already at that level. Do you understand? At least let it be that, oh, I've been able to hit TP. I've been able to, let some people be able to boast of making trades themselves. All right, so definitely subsequent classes, yes. But let me cover what I need to cover, especially on the TPO and some other conferences that you should add and all of that. What I should be keeping it one or two times. All right. So, good chain now, and please be very fast about it. This is already 10 p.m.
Hello, Star. Good evening.
Hi, good evening, Chief.
Yeah, okay. My question is on validating the type A and B entries on 4 hours time frame. Like, if you could show us through the process some of the trades that you just analyzed for us that you took this week. If you can just show
Validating
us,
what?
like validating the entries on 4 hours time frame using premium and discount.
Okay, let me use so let me just use this ADJ plus since it's here. Now you've gotten your pattern like this now, right? On the 1 hour time frame, by the way, this is bullish, right? Because you can see that price was coming in a downtrend, creating series of lower highs and lower lows, and then we had what price take out the lower high and went ahead to do what puts in a break of structure. So this is what bullish on the 1 hour prices were going to the upside and all of that. On the 1 hour now, you spotted this demand zone that you're anticipating, and then you saw this pattern now on the 1 hour time frame. You're anticipating to take a buy from here. Now, the next thing you do is okay, 1 hour is bullish. I'm seeing a valid entry on the 1 hour, type 1 or type 2. All right. Now you go to the 4 hours time frame. Your intention of the 4 hours time frame is to see where price could possibly go to, and if your entry is on the 4 hours premium or discount. All right. Now, if you look at what happened here on the 4 hours time frame, we had what a low, a high, a low, a high, a low, a high, low, high, low, what high. Now, if you mark out from this point, which is let me say from this low,
Hello.
this high at this point now. This was like in the midline of this 4 hours price action. Do you understand? Because this was the last low, the last high, the last low before was this high. So this would have not been a high probability on the 4 hours. But then for the fact that price had a lot of imbalanced targets on the upside, I knew that this was definitely going to be bullish. It was bullish on the 1 hour. On the 4 hours is like at the midline in between the premium and the discount. But then it was a continuation and more like a mitigation to the 4 hours worth. A mitigation to the 4 hours mitigation block, right? So it was just giving too many bullish signs. And then we had what a lot of imbalances to cover on the higher time frame, which is on the 4 hours time frame at this level that price was finally came back to cover at this point. So the thing is when you go to your 4 hours time frame, you want to be looking at if it's price bullish on the 4 hours, this setup I have is here on the 4 hours discount or 4 hours premium. Your typical buys should be in this first 50%, by the way, for typical buys. Your typical sales should be what in this second 50%. That makes it a higher probability. So when you're done with your analysis on the 1 hour, you now come to the 4 hours for something like this. Let's see this GBP NZD2. Now here you have what 1 hour price. Okay, this is 1 hour price action. Your whatever was spotted was on the 1 hour. Let me see if I can reduce the mess that is on this trade. All right, something like this now, cleared. Sorry, I may just need to do this down. Okay, so you've gotten your pattern now on the 1 hour. This is your typical entry mitigation on the 1 hour demand zone, all of that. Price is what bullish. Now when you go to the 4 hours time frame, you want to make sure that this particular buy is what on the 4 hours this thing as well. All right. Now on the 4 hours, price is what currently bullish. Because if you look at what happened, we were buying at this point until price was started reversing. When price changed character to take out the low, putting on that was low. But then at this point, what happened next? We had what? We had a change of character. Do you understand? Price took out this low, both structure and what were continuing to the upside. So this would be what the new 4 hours swing, which if you take out your 50%, and map out like this. This is what your new 4 hours swing. So you want to make sure that this particular entry is what in the first 50% of the 4 hours. And you can see that whatever is happening here is still what in the 4 hours discount, which is very important. Now you're anticipating that after this price puts in a new high, comes back what puts in one just like this, will continue with a bullish price action. So when you're done with whatever you're doing on the 1 hour, all you're doing on the 4 hours is to make sure that what your buys are in discount and what your sales are in premium. It's just a way to ensure that you're still in line with the trend and you're not just like spotting the models without having a narrative backing it up, right? So are you clear? First of all, before I move to the next person. Okay, he's muted already. You don't always have to mute yourself when you ask questions because you won't be able to unmute until I unmute you. Please go ahead and be very fast about it.
Okay, good evening. Can you
Yeah,
hear me?
yeah, I can hear you.
So you said something about refining because I noticed like okay when you say okay this other block you're going to take entry from like when I say this other block okay I'm going to take entry from here at some point price might go up like in the next 1 hour like go up a little and then still come back below that place I took my entry from. So you said something about refining so I don't know if you could.
Can you come again?
I said
Yeah.
when let me say I set a like there's an order block where I want to take my entry from, right? So you
Yeah.
notice like when price mitigates that place, it goes up, like 1 hour candlestick goes up, then it comes back, but it comes below that place I took my entry, like
Yeah.
almost like
On currencies, right?
before the thing.
It happens. It
Yeah,
happens.
even on,
It's not it happens most of the times. Most of the times I did you out trade now. I think price came back to earth like too many times. Let me go to the 30 minutes time frame so you see what happened on this. I was in profit, next thing I was in loss, next thing yes, I was in loss. Like if you look at what happened now, this was the first mitigation of my entry. This was where I took my entry from, by the way. I wanted to refine this to like somewhere here. Do you understand? But then I thought to just use 30% of 50% of the entire range here. Now, if you look at what happened on this particular time frame, this was where I marked on my order block from. It would have been correct as well to say my order block would have been here. That's just but let me clear this a bit so that it's not so oversharing. All right, I think it's way better like this. All right. So you look at this candlestick here. If I had mapped out my order block from this point, it would have been better as well. But then I was looking to not miss the entry. That's why I used this particular candlestick as my threshold. That is this bearish candlestick here. That was what I used to map out my entry. That was where I actually entered from. And if you look at what happened, when price mitigated my entry, this was the first mitigation. It moved to the upside, came back to this mitigation, moved to as high as this point. Then he came back again. Like he kept on coming back. I would see plus I would see plus 700. I come back minus 200 plus 1 5 minus this. It got as high as this point before was finally coming back into this level. All right. before finally coming back into this level, and then came back again, did this. So when I saw this hammer rejection, I was like, oh well, I'm holding this. This should hold. Do you understand? And then you can see that even after the confirmation, prices were pulled back as low as inside this point. This was the last hammer confirmation that price did before finally was holding. So that happens a lot of times. It's not nobody's assuring you that when price comes to your point of interest, it will just mitigate and move to the upside. That happens sometimes. But there are times you notice consolidations on your point of interest. There was one particular USD trade, like USD card that time. It was not even just coming back home. Like, look at what happened. Price kept on returning back to entry. Like, mitigate, sold as low as this was like almost 1:3 already, and still came back to entry. Came back again, almost the same 1:3, pulled back again. So you saw the pullback before and finally hitting take profit. So your trades may not necessarily be all mitigate and what go straight to entry immediately. Depends on the level of volatility that day. So there are times you can experience mitigation of your order on your order book, and price what comes back again to what take out, like go below that level and still what continue to the upside or downside depending on where your target is. So that is very normal, right? Bamson, please be very fast about your question.
Okay.
You can unmute yourself now.
Okay. Good evening, Star.
Good evening,
Yeah.
boss.
Please, my own question is concerning Profem.
Um,
On a 5K account, yeah. How many position can one open? That's one. Secondly, is it possible to enter a trade in a market order before setting stop loss and TP? Two. Number three, what is the maximum like amount that's profit that's on a funded account after one have passed the two phases? What's the maximum profit that one can make before withdrawal? That's within that 14 days of withdrawal. Because what I've been seeing is 3%, 3%, 3%. Please, can you just share more light on it?
so
Thank you.
different platforms have different views. I need you to stay unmuted so that I'll mute your phone. So different platforms have different views. Let's say for your first question now, you asked what was the first question? Can you hear me?
Yes, I can hear you. My
What was
first
the first
question my first question is on a 5K account, how many position can you open?
Okay,
Like
so
maybe risking 10% of each
you
this thing.
for your daily drawdown, I think daily drawdown on most platforms is 5%. Right?
Yes,
So 5% on the 5K account is like $250.
250. Yeah.
Yes. So your number of positions depend on the risk. If you're risking $100 per second, it means that you cannot afford to have 3 seconds running, because at stop loss on the three of them, you're losing like $300 already. You understand?
Yeah.
If you're risking $50 per second, it means that you can open up to four without
Okay.
depending on how aggressive you are. If you yourself you have your own trading rule that okay in a day you don't lose up to or more than $100, right? You can open the number of tokens that accommodate that. So that totally depends on you. Their own business is so far you don't lose their 5% daily drawdown. Do you understand? So the number of positions is totally your concern. Now your second question, you asked what was the second question? Please come again.
Is it possible to like open a trade on market order before
Okay,
before
so
taking?
I think there are profiles that don't allow that. But the ones I trade, I think on fundedness, I've done that a couple of times. A lot of times, by the way. I've entered the market order and they set my stop loss right after. I think I've done that on Alpha Capital as well. I don't trade Maven anymore, but when I used to trade Maven, I think they allow that as well. But I've seen people breach their account on some other profiles because of that. So what you do is
Yeah.
whatever profile you're buying, you just go through the
Blueberry to be precise.
what did you say?
Blueberry.
Blueberry. Oh,
Blueberry from
I've
funded.
never used blueberry except you would want me to make my researches and then get back to you. I've never used them
Okay.
before as a matter of fact. But I can check out for you and then get back.
All right, thank you. The third question, like, what is the like? Is there any like range of profit that someone can make before withdrawal?
No. It's not a must. I think for fundedness now, they say before your first payout, you're able to make like 5% of your account before your first payout, you get 15% profit split from your phase one and two. So the money you make from phase one and two, you get 50% of it, 15% of it. All right, that's like setting a target for you. But then minus all of those ones that would want to make people to overtrade or look towards targeting again. There's nothing like there's an amount that you must make or you understand. So long as your like whatever your account size is up to before your payout, so long as you don't breach any of your rules, a good and reliable firm should pay you. There's no target like for your 5K account you must make another 5,000 or another 2,000 before you get payout. Except it's a silly firm, but then all these reputable firms out there, I don't think one of them doesn't work that.
Yeah, the minimum. I think the minimum withdrawal is $100. But
Yes,
what
yes,
I've been
yes.
seeing, everybody has been shouting 3%, 3%. I was like, is it
Mm.
that 3% that one we make that's the maximum profit that someone can make on
Although
5K?
I suspect that some prophets may actually cap their profit. So there was one yellow prophet like that. I can't remember their name. Um, oh my god, I can't remember their name at all. It was one yellow F Fox something like that. I can't remember exactly. But then I remember I ran a giveaway for them. So I had like 100K account. And then when it was time for payouts, they said they can't pay me more than 3%. I don't know if that was because that was a giveaway account. Like I didn't purchase the account. I just got the account for free. Maybe that's why they had that, or maybe that's their rule. You understand? Some programs, due to liquidity, they may want to cap their this thing. That's the people that make money from people buying challenges. So that's why you want to use better programs. Just forget about all these cheap people that are looking for money and use something that you're sure of the payout when you make money. Forget about all this cap and all of that. Good programs, I don't think there's any reason for capping your profits. Do you understand?
Okay.
All right.
All right.
Uh,
Thank you very much.
you're welcome. I think I'll just take two more since more people are having their hands. For the okay, I'll stop at Joy. Informa. So from you, super that because you've been up here before. Lesson John, Jed, and OCD. Type your question in the question book. Prof King, good evening. You can unmute yourself.
All right. Good evening, Star.
Good evening. Please go
Yeah,
ahead.
thank you. Yeah, so actually, you have actually answered. This is the last person actually asked most of the question I wanted to ask about problem because I've been in your DM. Yeah, but talking about this, you talked about we should not go for the cheap problem. We should go for the high one. I don't know which problem will you now suggest. Is it the fundedness? Because
So
I've been trying to get it.
I don't mean cheap in the sense that you should not go for like you understand. I mean as far you want to use visible profiles. If you there's one of my friends, Bridget, she had like I think it's 9K payouts. Was it 9K? Yeah, it should be $9,000 payout that was hanging on Alpha Capital. And then because of the fact that okay, Alpha Capital is a visible brand on Twitter, it just took a lot of us, like a number of us tagging them for them to reply and release a payout. You can't do the same for top firms that have nothing to lose. Let me say somebody just comes out and launches their top firm, you know nothing about them, but because they are selling 50K account for $10. Do you understand? So you want to use visible top firms. For me, my most funding is on funded list, right? So I can vouch for them that it is something you'd want to use. I think I work for GFT as well. I'm no longer there, but then GFT is still good as well. I think they are selling 5K account for like $17 or something. I can't remember. But you can check them out. I think they pay out as well. You need to just see like visible payouts, not the ones that they post on their website. Let's see the people around you, you understand, are actually posting those payouts. You need to make sure that they are paying before you use them. So funded next, GFT. These are the two I'm so sure of. Maybe if you want to shift your leg a little further, you're going to go for the Alpha Capital. I don't know them so much. But then the most reputable or the longest now that has been standing for so far, FTMO. Just that FTMO has like stricter rules than the other ones. I think fundedness is so flexible. It is good for any type of trader. Web TMO favors swing as more, except that I think you can't even hold trades weekend as well. So it's one thing or the other with it, but then this four you can take them out as well. So Vicenzo, good evening. You can meet yourself.
Good evening. Can you hear me?
Yeah, I can give you.
All right. Please, I would like to ask about, okay, let's say for instance now in MT5 when you place a trade, like those options there, like equity margin, free margin, and the likes. I would like wanted to touch on them, and also on the issue of spread. So
I
because
think
I heard that like
I already sent I sent a voice note to the group one time explaining it. I'll probably just tag it to the link. I'll I'll try to trace it and then drop it for you and start on discussion. I explained it one time using a screenshot. I'll just go back to it tonight. Okay, Joy, Informa, you gotta meet yourself.
Hello, good evening. Please, can you hear me?
Yeah, you can please go ahead.
Okay. I don't know. I dropped my question on the question topic, but you have not replied. So let me just ask it here. I want to know when I'm supposed to like exit a trade, like take partials. And I want to also know when if it is advisable to leave a trade for like 2 days, 1 day, something like that, and when to know when a limit order is no longer valid anymore, because that's how I do it most times. Whenever I execute my trades, I just take it on limit order so that I don't miss out on the entry. So I want to know when to actually delete a limit order. Like, does it have to stay for like a few days, or like when it's not valid anymore, when to be able to delete it? I
You
want
know,
to know.
you know that first of all, where it takes like when you start having courses or concern, when price goes above the take profit, it start tagging your entry. Do you understand? But then when it goes way above the take profit, it start tagging your entry. It means that you're not going to be using the current price action and cancel your own limit order yet. Do you understand? So it's just like when you have sorry for taking you back to the chat. So let's say you have something just like this. Uh, you have an entry here, right? And then price is here to mitigate it, and then price does something like this. It has taken out your target now without mitigating your entry, and then pulls back to like this. All right. Of course, you're not going to be looking at this level again. You're going to be watching out for your entries in what current trends. You understand? So when price takes out a target and goes way above the target, it's no longer a valid entry until price what tries to retrace towards that point. I think I should probably emphasize last point of true mitigation. We should explain this properly. Just remind me one of these classes I should talk about it. Then your other question on where you should target, I told you, you're targeting liquidity. I think there was one session where we talked about it. You're targeting liquidity, more like engagement levels. You're targeting targeted highs and lows, which is the previous higher highs in an uptrend, the previous lower lows in a downtrend. Then you're targeting where else again, internal highs and lows as well. For me, synthetics, I target internal highs and lows. If you look at this particular VIX 10 now, this is volatility 10. If you look at the first trade now, you realize that this is the targeted high, by the way. This is the higher high, the last higher high here, which is still a good target, but I prefer to just target an internal high. That is the engagement before that higher high. If you look at the second setup as well, this was my target here, which is what the engagement before that higher high. But then this would have been what a good target as well, which is what this higher high. Because higher highs are what targeted highs. So you anticipate that price will take them out before mitigating what, before continuing an entry. But if you look at what happened now, this is what this is price was taking out that higher high. This would have been my own target, internal highs and lows. So you can target internal highs and lows. You can target levels of what inducement. You can target higher highs in an uptrend, lower lows in a downtrend, just depending just like that. If I'm the one taking this particular setup now, this would have been my target here, right? At this online, this is like a one ratio rate, which is what that this would have been my target, all right? But then even targeting the previous highs as well, for instance, still most likely will take out the previous highs. But I just prefer to target internals because I don't want price reversing on me. You know, that subtle mitigation to a particular order block, whether bullish or bearish, before continuing in your direction. All right. So that's how I do mine. The person that was complaining, we didn't drop a username, so when you're ready, just drop a question on the question group. That's the guy on the Telegram chat and discussion. He was talking about not being answered. Right? So this is going to be the end of today's class. I'm going to see that I drop the recording. I'll have Stan drop it after the class. As usual, if you have any question, always drop them on the question subtopic. I usually take my time to go through them and answer them at least an hour every day. All right. And then for next week, I should probably share some trade ideas. I may not, but I should. All right. But for those of you already trading, happy trading week in advance. I wish you a very good trading week. For those of you still learning, keep at it, keep on doing what you're doing. You're on the right path, definitely. To make sense soon. And to everyone of you, take care of yourselves until we meet again.